Hello, everyone. I'm Meher Walia, and welcome to Finding Finance, the podcast where we delve into the different subfields of finance. This podcast aims to help high schoolers who are contemplating a career in finance understand the different paths in the world of finance and help them find which path interests them the most. Our esteemed guest today is Rajinder Singh. He's the Chief Executive Officer, President, and Chairman of BankUnited Inc. Mr. Singh was one of the founding organizers of BankUnited, prior to which he was Managing Director and led the financial services practice of W.L. Ross & Co. BankUnited Inc. is the bank holding company of BankUnited N.A., a national bank headquartered in Miami Lakes, Florida, with banking centers across the state of Florida, New York, metropolitan area, and Dallas, Texas. I hope you enjoy our conversation with Mr. Singh. Mr. Singh, thank you for joining us today. It is a pleasure to have you on the show.
Thank you.
Let's start at the very beginning. Take me all the way back to your upbringing and give us insight as to what your life was like when you were younger. Where did you grow up? What were your favorite subjects in school? What were your hobbies?
Sure. So let me start by saying thank you so much for interviewing me. This is the first time I've ever done a podcast. So, we'll delve into your questions. My upbringing, I grew up in India. I grew up in the 70s and 80s. I went to high school in the 80s and college in the late 80s into the 90s. My upbringing was a little bit different than, what life is like in the U.S. India was a very different place back then. And my favorite subjects in school I was a STEM kid, always. Math and science came easier to me than did arts and the humanities. And coming out of high school, I chose to go into chemical engineering. And I have to say I didn't really enjoy it that much, but I did become a chemical engineer. I worked as a chemical engineer for a couple of years and then went to business school and then found finance, which is what I do for a living today.
Really? So the switch from chemical engineering to finance is really interesting. In my previous podcast, guests have also talked about the switches they've done from different career paths.
Yeah.
So speaking about college, you graduated from Indian Institute of Technology, one of the hardest schools to be admitted into with less than a 1% acceptance rate, majoring in chemical engineering. How was college life in India?
A lot of fun. Yes, it is tough to get into IIT. It's tougher, even tougher now than it was back then, but it is tough. And I got lucky. I somehow got in, chose chemical engineering without really knowing much about it. We were not as wise as you kids are who are thinking about these things while you're in high school. You don't really have that luxury. Most kids with a STEM background in high school back in the day had two choices. You could go towards the medicine track or the engineering track. And so if you liked biology, you became a doctor. And if you didn't like biology, you liked more math and physics, you became an engineer. So that's what happened with me. I was in the STEM track. I was good in math. Analytically, I was strong. And so you don't really never really thought that much back in the day. And you take the test for the entrance to IIT. And like I said, I was able to clear it. And I found myself at IIT and picked engineering based on whatever rank I had in the entrance test. And chemical engineering became my major. But I very early on realized what chemical engineering really was, maybe by my second year, and didn't really care for it as much. And if I could go back and do everything again, I'd probably choose a different track for myself. You asked a question about how do you switch, chemical engineering to finance. It doesn't sound obvious. Yes, in terms of the area of study, it is not obvious. But if you think about what is needed in both those fields, is generally, if you're strong analytically, you will do well in both fields. So, but just because you're strong analytically doesn't mean you should go into finance and doesn't mean you should go into engineering. Being strong analytically is a prerequisite, but not a sufficient condition for, success and happiness in that field. So doing what you're doing, understanding what it is, what is a life of, a banker or of any finance professional, I think that is more important. Um, and then what it takes to be successful is, of course, you have to be analytically strong. You have to put in the work, and then you will be successful. But it really is exciting to see young people your age actually digging in and asking these questions, which I never had the smarts to ask back when I was your age.
Oh, and and being strong analytically, is that something you developed when you were majoring in chemical engineering? And was that something that helped you later in finance?
Not really. I would say that, when I say strong analytically, all I mean is I could add numbers very fast. My grades in math and physics used to be always better than my grades in English and history. That's really all it is. What I learned in the level of math you have to learn and apply in engineering is much, much higher than in finance. So there was a lot of math that I did in college as a chemical engineer, which is not needed in math, at least not in what I'm doing for today. But by just being strong analytically, it just makes life a little bit easier. I joke about the fact that I can just probably add a little bit faster than the average person. By the way, as you get older, you lose that ability also. So I'm not sure I can add that fast as I used to. But that's about it. But how I ended up being a banker and not in why I didn't end up in some other industry, it was all an accident. I just was offered a job that happened to be in a bank, and I knew I wanted to do finance, but it could have been in a pharmaceutical company, it could have been a manufacturing company. Finance is everywhere. But the reason I ended up at a bank was just dumb luck. I just interviewed for a few jobs, and I was offered this job, and I just took it, and here I am 30 years later, still in the same industry.
So do you mind explaining that a bit more? If I correctly understand, you were just interviewing for a few jobs and you came across one banking job,
Yeah.
and you got hired for it.
Yeah. I knew after business school is a 2-year degree. It's a grad program. It's 2 years. After a year, I knew that I liked finance enough, and that I also knew that I had the prerequisites for being successful. Like I said, the prerequisite being that I could add two numbers faster than the person next to me. But finance is a function that is found in every industry. No matter what company you're in, there is a finance department. Which industry I would end up in, I really had no idea. So I was, at that time, interviewing with all sorts of companies. Like I said, I had a few job offers coming out of business school. One was at a pharmaceutical company. One was with actually a chemical company. One was with an auto manufacturer, Ford. And one was with a bank. And choosing a bank was not exactly a very well thought out decision on my part. I just randomly picked the bank instead of the pharmaceutical company, and then just made my career in banking.
When you chose the bank, what were some of the roles you played early on?
Sure. I was hired to work in what is called corporate strategy or strategic planning. Mm-hmm. That was my first job, in which and in mergers and acquisitions. So banking is a consolidating industry. That means a lot of banks. There are too many banks in the U.S. And for many years now, for many decades now, they've been merging amongst themselves, and there are fewer and fewer, but larger and larger banks left. So the bank that I went to was very acquisitive. They was buying a lot of other banks, merging into them. So there was a whole group of people dedicated to doing that work. That was my first job, which that's how I cut my teeth in banking.
Oh, that's interesting. So after graduating from IIT, as you said, you went to business school and you entered Carnegie Mellon. How did college in India contrast to college in America?
I think college in India is very hard to get into because it's much, much more competitive. But the education itself, the teaching, is much, much better here in the United States. The quality of what you're taught. So I enjoy one. I think I made a mistake by going into chemical engineering, so I didn't enjoy it that much. Second, when I was a little bit older and made the right choice to go into business school and take on finance, that was a better decision. So I enjoyed it. Plus, the quality of teaching was much better, and I really enjoyed the 2 years at Carnegie Mellon.
So those were the two factors that really helped you enjoy the quality and your interest in finance.
Yes.
So I see that earlier in your career, you served as Executive Vice President of Capital One Financial Corporation's banking segment. What did you learn during your time at Capital One? How did that stint help you later in your career?
So I got to Capital One through a merger. I used to work for a company, a local bank over here in Long Island called North Fork. I ran the M&A practice for them in terms of their M&A efforts. And the only, as part of that job, we merged North Fork into Capital One. And I stayed at Capital One for about a couple of years, a little less than 2 years, after that merger, and helped put those two banks together. So my role over there was one of integrating the two banks, and then once the banks were integrated, running a part of the bank, of the combined bank. So, but I was there for a short period, I think 18 or 20 months, after which I took a role in private equity at Wilbur Ross & Company, which was the only job I've had outside of banking, and that was also a short stint, only for a year, and then got back into banking with BankUnited.
So you mentioned acquisition and merger a few times. Do you just mind giving a brief explanation between the difference between the two?
Between merger and acquisition?
Yes.
Not much of a difference. Usually when two companies are coming together and they're roughly the same size, it's called a merger. And when they're not the same size and one is much bigger than the other, then it's called an acquisition. But technically there isn't that much of a difference. It's just if it's equal size companies, you call it a merger. Otherwise, you call it an acquisition.
I see. Got it. Thank you. So as you're saying, after Capital One, you transitioned to BankUnited a bit later on.
Yep.
You served as Chief Operating Officer and were instrumental in the largest bank IPO in U.S. history when BankUnited Inc. went public in 2011.
Yes.
What is an IPO?
So an IPO is the process of taking a private company and making it into a public company. A private company is one that is owned by a few people, and maybe it's one person or 10 people or 20 or 50 people. A public company is owned by thousands of people, sometimes millions of people. So when you think of the large companies from American Airlines, Apple, IBM, BankUnited, these are public companies. They're not owned by any one individual. They're owned by lots and lots of people. And they trade on the stock exchange, which means if you want to buy a small piece of the company, Monday through Friday, 9:30 to 4, the market is open. You can step up and buy 1 share, 2 shares, 1,000 shares, 1,000,000 shares, whatever you want. So that is a public company. So when BankUnited was created in 2009, it was created as a private company. It probably had about a dozen or so shareholders. In 2011, we converted it to a public company, which is that process of converting it to a public company is called an IPO or initial public offering. And yes, at that time, it was about $1 billion initial public offering. So we sold about $1 billion worth of stock. That means anyone from the public could step up and buy that $1 billion worth of stock. And that $1 billion IPO, as it is known, at that time was the largest bank IPO in the US. Subsequent to 2011, there have been other banks that have gone public and have been a little bit bigger. But at that time, we were very proud of the fact that this was one of the biggest that had ever been done in the US.
So that is incredible how large that share was. And thank you for that definition. So what work were you involved in as the IPO was taking place?
Well, I had two jobs, so to say, at that particular year leading up to the IPO. One was my day-to-day operating responsibilities, and I had several. About half the bank was under my supervision. Various departments, mortgage banking, retail banking, and a bunch of other things were my day-to-day responsibility. But when you take a company public, you also have to do a lot of work in preparing for the company to be a public company. There's a lot of filings that have to be done. There's a lot of financial work that has to be done. And that itself can be more than your day job. So you end up working very long hours for a few months leading up to the IPO. So in that year, I was doing my day job, and then I had a night job, which was preparing the company to be public.
That's incredible how you get to work double shift, basically.
It was double shift, and then we took the company public, and I think 2 weeks after that, I took a week-long vacation. It was the sweetest vacation ever.
That's a well-deserved vacation. So, do you mind explaining what exactly is your field in finance?
My field is, so I'm Chief Executive Officer of what is called a commercial bank. Banking, roughly, can be thought of the three types of banks. There are retail banks, there are commercial banks, and there are investment banks. So if I just very high level, I could say there are three types of banks. Retail bank is what you think of as, typically a bank. You drive by, you see a branch with a little parking lot. You can go in, you can, deposit a check, you can get some money out of an ATM. That's retail banking. You can apply for a credit card or get a mortgage. It serves retail customers. It serves consumers, people like you and me and, just everyday people. Commercial bank is a bank that is focused on serving commercial customers. So somebody has a business, somebody has a small manufacturing company or a distribution business. A commercial bank's clients are businesses. Some business wants to build another warehouse and they want a loan. They'll go to their bank, a commercial bank, to borrow money to build a warehouse. Somebody has, 500 employees and they want to, pay them every 2 weeks and do payroll. That function is done by a bank, cutting all those checks for all the payroll that is being done. That's done by a commercial bank. BankUnited is mostly a commercial bank, but also a retail bank. But our focus, especially on the lending side, is more on the commercial side than on the consumer side. We do lend to consumers, but that is a much smaller part of our business than lending to commercial customers. The third that I didn't mention, which we are not in the business of, is investment banking. Investment banking are, when you think of Goldman Sachs and Morgan Stanley and Merrill Lynch and so on, those are investment banks. Investment banks help companies go from being public to private or private to public. They're the ones who advise you on mergers and acquisitions. So they are, quote unquote, the Wall Street banks. Now, there are some banks that have all three businesses. So JP Morgan, as an example, they're a retail bank, they're a commercial bank, and an investment bank. Bank of America is all three. We are two. We are a retail bank and a commercial bank. So, but we don't do investment banking business. And my job is, I'm the CEO, which means my job is to set the strategy of the company, execute it, make sure I have the right team, make sure we're making money, we're keeping shareholders happy, we're keeping regulators happy, customers happy, and so on.
So you're more commercial heavy in that aspect.
Commercial heavy, yes.
Got it. Mm-hmm. And as you mentioned, you are a CEO. Mm-hmm. What does your typical day entail?
I don't think I have a typical day. Yesterday, as an example, was earnings day. We announced earnings for the last quarter. So yesterday was totally different from today. So yesterday I came in early in the morning. We announce our earnings at 7 a.m. At 9 a.m. we do a earnings call, which means our investors get on the phone with us and we walk through, how we did last quarter. We take questions. After that, I did a company-wide phone call where I explained how we did to the entire company. After which I took a couple of calls from some bigger investors who wanted more detail on how we did. And then I had a couple of meetings later in the day about a new business that we are building. I wanted to get an update on that. And there was another administrative thing. And then I flew back. Today was totally different. Today, my morning was occupied by looking at our products, our deposit products, and trying to figure out how do we price these things. Do we want to pay a little more on deposits, a little less? How are we doing? How is this next quarter shaping up? I spent 2.5 hours with a large number of people going through the business and seeing, what clients are coming in, which client left, why did they leave, what could we have done to retain them, those kinds of things. I spent a couple of hours doing that. So every day is a little different. There isn't a typical day. There isn't a typical time that I go into the office and do these 6 or 7 things. But I do travel a lot because the bank is in Miami. So sometimes I'm in New York, sometimes I'm in Miami. And then we have, business in many other states. So I travel to other states as well.
So it varies day by day, a bit of an adventure.
Yeah, it is. It is a bit of an adventure. Monday this week, the entire day, you could say that I was playing golf. But what I was doing was we bring 50 or 70 of our top clients to an event where we socialize with them and we play golf. And I'm not much of a golfer, but I was out on the golf course and just meeting with everyone, making sure they were happy with the work the bank was doing for them, and trying to find out ways in which we could do more business with them, and just thanking everyone for giving us the business that they give us. So that was Monday, right? So every day is a little bit different. But sometimes I'm spending time with clients, other times I'm dealing with internal issues. This morning, you probably have seen the news that there was a big malfunction across many computers all over the world. And so I woke up to that, a bit of a crisis. Luckily, it's all in control, but sometimes things happen that you don't even plan, but you have to deal with them when they happen.
Yes, in that update I heard today, a lot of airlines, banks were troubled by that.
Just about every business I'm hearing, from the New York City subway system to airlines to entire news networks to governments. Airports are down. And it's not just local here. It is from Japan, Australia, India, Europe, everywhere. It's a big issue. It is getting resolved. We were not directly impacted, but we were indirectly impacted. So, you do have fire drills like that happen from time to time. So you have to take care of those too.
It had an international presence, and that was mainly due since we're so reliant on the internet and technology, which was actually something that wasn't there 20, 30 years ago, which is leading me actually to my next question, how finance has changed rapidly over time, the more dependent on technology and other features. Where do you see your field 10 years from now? How will AI have an impact on it?
Oh, yeah, it will have a pretty big impact on us, as it will on all businesses. It's not completely clear today exactly what way, shape, or form this will happen. Every bank is studying it very carefully, but cautiously. Banking is a business where we are trusted with other people's money, and that is a very big responsibility. So we tend to be very careful and not be very, we tend to be risk averse because we have the responsibility of safely looking after our clients' money. So AI will come with a lot of benefits, but it'll also bring some risks, and we need to understand them better before we deploy it. But I can see a lot of functions in the bank that could be done better and faster and cheaper using AI technologies, whether it's how you decide on loans, which loan to do, which loan not to do, how to price things, where to make investments, where not to make investments. AI could be brought to bear and as a tool to enhance the work that our people do and build on that. But it's very early, but in 10 years' time, I think it will have quite an impact.
That's interesting how it could be used as a tool and not as a full replacement, as in other industries.
Yeah, at least the way I see it today, I think this will be something that will, enhance productivity. It'll be a tool that will help people be more productive rather than just replace people. I think a lot of technology is like that. A lot of technology, when it comes out, always the fear is, oh my God, we're going to lose jobs. But yeah, you may lose some jobs, but it creates enough value that new kinds of jobs that could get created that you could have never thought of. The simple example of that I give is 10, 15 years ago, before the iPhone came into existence and before we ever heard the word App Store, there was no App Store. There were no apps. There are, 2, 3 million apps today? Somebody creates those apps. Somebody maintains those apps. Somebody's livelihood is based on those apps. And 15 years ago, if I had said to you that there will be a new industry created where people will create apps that will make your life better, you would have looked at me like, what are you talking about? So likewise, 10 years from now, with the technology that is being created today, whether it's AI or something else, some other type of economic activity will happen that it's hard to imagine what it is. And it'll make life better. It'll probably, the productivity that'll come from that will maybe impact some jobs, but it'll create other kinds of jobs. I look at it positively, but you just have to be careful. You just have to, understand the risks also that come with these technologies.
Yes, that's always important, understanding the risk, but also acknowledging its value. Retrospectively, would you pursue this career again? Would you have done anything differently?
I am actually very happy with my career in finance. I think I did eventually find the right career. If I had stayed in engineering, I probably wouldn't have given that answer. Probably, I've been asked this question before, so I kind of, this is not the first time. I think there are other careers that would have also been very interesting. I think if I was going back all the way to high school, I would have looked at architecture, for example, as a career. I think that would have been a lot of fun. But I didn't even know about that at that time. But with finance, I'm actually pretty happy. I find purpose in what I do. It's fun. It's challenging. Sometimes it's annoying, but for the most part, it gives me purpose, and it keeps me challenged. It keeps me on my toes, and 4 out of 5 days I have a lot of fun, and that's a pretty good batting average.
That's the most important part, having a purpose and enjoying what you do.
Yeah.
On a lighter note, how do you spend your free time? What are some of your favorite hobbies now?
Oh, I don't have any free time. Well, when you are the parent of kids who still don't drive, you spend your free time driving them around quite a bit on weekends. So I still do that. But I'm looking forward to when your friend, my son, can start driving himself, and maybe I will have free time. I won't have to drive him to tennis every Saturday and Sunday.
Do you play tennis yourself?
I used to. I haven't played in a while. I used to also play squash, which I haven't played in a while. But yeah, I enjoy racket sports now. I enjoy watching them more than playing them.
I actually play both squash and tennis. Squash more than tennis now, but they're both great sports.
Yes.
So now for the question I ask every guest on my podcast. For kids in high school and college looking to enter the world of finance, what advice would you have?
The advice that I give to people starting any career, not just finance, first of all, learn as much as you can by talking to people who are already doing it, and try to look beyond the glamour or the caricature of that job, right? There are all kinds of interesting fields, all kinds of interesting jobs. What you're looking for is one, like you said, that is a good match for your abilities and your interests. And once you find that, it's a two-part problem. One is knowing yourself, and the second is knowing what the job is about or a career is about, and then trying to match those up and say, is there a decent match? Knowing yourself is actually the harder part of the challenge. For example, it's fairly easy to know that you are, a STEM kid, or you're not a STEM kid, or you're more creative or less creative, or what, you can see what your strengths are. But also beyond that, what kind of qualities, we're all different. We all have personalities. What is, I'll give you a few examples. For example, like let's say you are very detail oriented, and another person is not very detail oriented. If there are certain jobs that require you to be or certain careers that require you to be very, very detail oriented. If you're an accountant, for example, you should be very detail oriented and make sure everything ties out. If that's not you, then maybe it's a different career that you should look at. Some jobs require a lot of travel. Some careers, if you're going to become a consultant or you're going to be on the road all the time, okay, let's say you don't like flying or you don't like traveling, then maybe you should not think about that as a career, because you'll not be happy. So understanding what different careers require, and understanding what your abilities, your interests, and who you are and what you will enjoy, and then trying to marry that up, and you'll make some decisions that will have to be tweaked as you go along. It's not like you make a decision and then you have to stick with it for all your life. The second thing I will say is this is a burden that you kids will have, which I don't think people my age had this. It's a very fast-changing world. And jobs will change, the job market will change very rapidly. Days of getting on a track and then sticking with that for the next 40 years, basically that world is gone. And if there's one thing that is going to be very important is to be successful is to learn continuously and evolve continuously, because the job market will change. We were talking about AI a little while ago. One of the hottest jobs in the market for the last few years has been coding. Now, AI might change that completely, and there may not be a big need for coders 5 years or 2 years down the road. So you may, if that's what you chose to do 3-4 years ago, well, there is, you're going to have to reinvent your career. And reinvention only happens if you're open to learning new things all the time. So that's something I think it's a way of thinking that, certainly growing up, I didn't have to think like that. I just got on one track and followed it all the way through. But I think it'll be a little different for you in your generation.
Thank you for that insightful piece of advice. Mm-hmm. And thank you for joining me today and being a guest on my podcast.
It's my pleasure.
Thank you.
Bye.